and welcome. You've tuned into Business Lunch. I'm Nisha Podar and with me is Sonia Shenoy. Sonia, good afternoon. It's a good day of trade today. Navratri cheers are really revving up the market. A relief rally is clearly seen today. Nifty scales above that 10,400 levels. It's the banks which are up over 2.5% and the mid caps which is really taking ahead the rally, which is seeing a huge buying up over 500 points. And it's this very factor which has really led to a very strong market breadth today, and that is really continuing. Only a handful of really IT stocks led by Infosys and even Sun Pharma from the pharma pack are a big drag on the overall markets. The financials, the NBFCs are clearly bouncing back today, but we are out of the woods or not. It's too early to say that, Sonia.
Oh yes, it is too early, and rightfully so. I mean, from extreme fear to extreme optimism, I guess it's not really believable at this point in time. So what we perhaps need to see is a slow and steady up move in the market. For today, of course, we'll take what we get. Looking pretty good. Couple of pockets, NBFCs are the big movers. On the downside, though, you have IT and pharma that's under a bit of pressure. But let's also get you a check on a couple of the key internals there in the money markets. The rupee has also recovered from yesterday's record low. So it's currently now at about 74.17. Remember, it had gone all the way down to 74.4. And, a little bit of a recovery is what you're seeing at this point in time. Crude oil prices have also eased.
Oh yes, Sonia. So that's also really putting a lot of comfort in the markets today, and crude oil prices is back to a partial shutdown in the Gulf of Mexico ahead of Hurricane Michael. And also, however, remember, Brent is currently trading above the $84 per barrel mark. So it's not that it's a huge relief, but definitely better than the higher levels above $86 per barrel level that we had seen. So that's a big relief coming in. So both rupee as well as crude helping the overall markets. But one particular pocket which is really doing well today is the NBFCs. They are trading higher today, 10 to 15% on most of the counters, which was slammed down in the last few trading sessions. And the move really comes back after banks led by SBI, the largest bank in the country, State Bank of India, has decided to buy loans from the NBFCs. Lata joins in with more details on this. Lata, what will be the impact of this? Clearly, at least the sentiment is looking very good.
This deal is a win with a capital W for the banks and a lowercase w for the NBFCs. Banks are quite clearly not willing to lend loans to NBFCs, even up to the sanctioned limits. The argument being that for every loan, they have to keep capital of 20%, which means 2 rupees for every 100 rupee loan, provided it's a AAA. If the NBFC dips in rating, then they will have to keep 7 rupees out of for a 100 rupee loan, and capital is hard to come by. Therefore, what they have posed to the NBFCs is that if you have a liquidity problem, we will buy out the entire loan, and you don't have to repay the loan. The money is yours. The money is freed. The problem is, if the problem is very acute for an NBFC, then banks are even more proactive because they don't want an NPA borrower on their books, and so they're willing to buy out a portion of the loan so that that money can be taken by the NBFC and he can redeem his CPs or debentures. Now, the debt market has not yet seen CPs of NBFCs being bought. It's too early in the day. But their belief is that in course of time, things may ease up a bit. But what could happen is if banks cherry pick and NBFCs give their best loans to the banks, going down the road, even if the temporary liquidity problem is solved, there could be a liquidity problem later on because NBFCs may be perceived to have a slightly lower quality residual loan book, and it may get that much the more difficult to raise capital. But that's a problem for a later part of the day, for maybe a year down the line. At the moment, it looks like the debt problem will defreeze. The way the stock markets have cheered, if even 1% of this cheer steeps into the debt market, it's quite possible that in a quarter or so, the worries about NBFCs not returning loans could be forgotten, and even the medium-term issue may not happen. For the moment, the bankers and debt markets believe NBFCs with a very strong conglomerate backing, corporate backing or an LIC backing, will be the ones that will come out of the problem easier. And for all you know, they will even eat up the market share of the smaller NBFCs. For smaller NBFCs who are selling their loans, liquidity will not be the issue, but growth will definitely be an issue.
Okay, thanks a lot for that, Lata. Well, the SBI chairman Rajneesh Kumar has said that the bank has the risk and the growth capital to help stabilize the financial system, and hence this decision has been taken. We also spoke with Union Bank. They said they're looking to buy up to 5,000 crores of NBFC loans within the next 2 months itself. Listen in.
Sometimes there is always an overreaction and people don't go into a detailed analysis that what exactly is happening. But the moment a few NBFCs, their dependence on the short-term borrowing goes down, automatically you will see all-round improvement. So we have the risk capital, we have the growth capital, both are available, and we have the liquidity. So that way, like State Bank, I consider that we are in a situation where we can help in stabilizing the growth and we can help in stabilizing the financial system.
We are processing about 2,000 crores of portfolio buyout. The due diligence is going on. It's a continuous process, and we have space for maybe up to 5,000 crores of portfolio buyout in the next 1 or 2 months. It will be at a reasonable rate, which we are doing, and with the risk pricing mechanism we have. And these are our regular customers. Actually, we will not, as public sector banks, we never do that kind of vulture pricing.
Indiabulls Housing for the last many years has been selling its portfolios. Over the last 18 months or so, ever since our balance sheet crossed a lakh crore size, we actually upped the whole program to almost 25 to 30% of our incremental financing. So last year we sold roughly 11,500 crores of loans. In the first half, we've sold approximately 5,000. We should be selling 3,000-4,000 crores this quarter. We've done primary issuances of over 3,500 crores. So in that sense, the bond markets are differentiating. At some level, even the equity markets are differentiating.
I don't see that any immediate requirement of selling, but banks are willing to buy. They have already indicated to us. We are in discussion with various banks. They are already sanctioned the credit line to the extent of about 1,700 crores, and they are willing to take additional exposure also. There is no problem. See, banks will be very selective in their approach. They will see. They will not only see the ALM, they will also see the business model.
All right, so those are the buyers as well as the sellers, the NBFCs as well as the banks. So strong support coming in from the largest bank, State Bank of India, and other banks are rallying behind it. But to take the story forward, and there is a bit of a clarification also coming in from State Bank of India. Sources tell us that no large loan portfolio, as has been reported or being talked about, has been bought from DHFL recently. In fact, our colleague Ritu Singh joins us with all the details. Ritu.
Well, many NBFCs may be lining up in the market to sell their portfolios to generate some liquidity, and banks are also evaluating these opportunities. Remember, just yesterday, State Bank of India said they had tripled their target to buy out loan portfolios from NBFCs to almost 45,000 crore rupees. But that said, no such large loan portfolio buys have been made, at least by State Bank of India just yet. We spoke to officials within the bank, amidst rumors and reports in the market that they've bought a 5,000 to 7,000 crore rupee loan portfolio from DHFL, and SBI officials have denied this report. They said, yes, in the past we've made such purchases from DHFL, but this time around, at least in the recent past, no such large portfolios have been bought. In fact, they continue to evaluate opportunities in the market and will be making announcements as and when they do buy out large portfolios. But as of now, nothing concrete on the table, at least as far as SBI and DHFL is concerned.
Okay, thanks a lot for that, Ritu. Well, anytime now we have the cabinet meeting that will begin. Ravi Shankar Prasad will be addressing that cabinet briefing. So we'll cut to that when it begins. For now, let's take a quick look at what's happening in the market. It's looking like a really pretty picture. Like I said, from extreme fear to extreme exhilaration in the market. It seems a bit odd, but we'll take what we get. The Sensex now up almost about 430 odd points, and the Nifty looking very pretty, up about 150 points. Whether this is going to be a V-shaped recovery or not, only time will tell. But for now, the bounce back has been pretty sharp. But Zee Entertainment is a stock on our radar right now ahead of its Q2 numbers. Mangalam is here to tell us what are the key expectations. Mangalam, this time around, the expectation is that ad revenue growth will be strong?
That's right, Sonia. You know, yes, right before this, you were talking about the markets showing a V-shaped recovery. Let's talk about the Z stock. It's showing a Z-shaped recovery because it was down about, what, 35% from its 52-week high. Just 2 days ahead of numbers, it's up about 10%. Ad revenue growth, that is the key determinant of their revenues. So 19 to 20% growth seen there. The management has guided for about mid-teen ad revenue growth for the remainder of this year, but this is a seasonally strong quarter, so 19 to 20% growth seen there. Domestic revenue growth, which is also an important component, likely to grow anywhere between 14 to 16%. Overall, we're expecting a revenue growth of 18.4%. EBITDA likely to grow a little higher. 19.5% growth is what we're expecting out there. The street is watching out for margins because remember, the fears are incremental investment in their OTT business, ZEE5, and the content out there for their online platform. Is that going to erode margins or not? Right now, we're going into the numbers expecting a flattish EBITDA margin in terms of year-on-year comparison at 31%, and that brings us to the bottom line. Now, optically, the net profit would look lower by 37.5%, but that's only because of an exceptional gain in the base quarter. Numbers are likely to look good. The stock up by about 10% in the last 2 days.
Oh yes, a fair bit of recovery seen as far as Zee Entertainment is concerned, and the results are awaited soon. Thanks so much, Mangalam, for giving us a heads up with